Bitcoin's the answer here. All of this, all equities, all the custody, all the bonds, all the credit, OTC derivatives, the whole lot should go on chain because there's a source of truth that is fundamentally required in the event of something going wrong.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Raoul Pal says, bet on crypto or get left behind. He dives deep into why crypto is the future, how it's changing finance, and what you need to do now. Let's watch and find out.
And I think what's interesting is what you're talking about prime broking is banks' balance sheets are restricted because of Basel III and soon Basel IV. Their ability to lend or leverage their balance sheets in the way that is required to expand that has been one of the things that has restricted the hedge fund industry as well, because there's just not much available. But you went through something that I was involved in also in around early 2012, 13, 14, was this direct lending model. And that was the first glimpse. Family offices were lending directly to trade finance and stuff like that and getting great rates of returns, and there was no intermediary in the middle. And I think what you're saying is we can do that all over again to the massive prime broking industry, both in traditional markets and in crypto markets, because the hedge fund industry is nascent but growing.
That's right. That's right. It's what I call democratized prime brokerage, and I think that is a reality that we're going to see over the next couple of years.
And so, talk to me about the journey of Figure, because you start off with the securitization, but you're building all sorts of things. So, give me the whole Figure story.
Yeah. So the initial story was predicated on that disruptive concept of taking out 100 plus basis points of cost through asset origination, aggregation, securitization. And by the way,
just to explain to people why 100 basis points is a big deal.
Yeah, so you're in an industry where your gross margin might be between 300 to 500 basis points. So, and that's gross. Your net would be, 1 to 200. So taking 100 basis points of cost out is a massive profit enhancer for you. And by the way, when I started Figure, I reached out to Chris again and told him I had this idea about using blockchain to disrupt the capital markets. And he again told me it was a dumb idea and I shouldn't do it, and it would never amount to anything. And so, I've not listened to him twice. Both times it's been the right thing to do, but I have great respect for him. And so, by the way, Chris pioneered peer-to-peer lending. Like, the Lending Club folks generally get the credit for that, but it was Chris Larson doing all the hard work in the very beginning. And I have a lot of respect for him for doing that. But so the basic premise for us was we wanted to build this disruptive capital ecosystem, and we kind of had to work backwards to, I went to a bunch of banks in 2018 and I tried to convince them, look, if you do asset origination and securitization this way, here's why you're going to save money. Here's how blockchain is going to be effective. And they all said, this is great, Mike. We love it. We'd like to be the 10th bank to do this on blockchain. And so, obviously we had to have a first mover, and as an entrepreneur, you're always trying to de-risk that first mover. And so I said, well, we'll just do it ourselves. I'll just stand up a lender and I'll start lending on chain. And so we did the first loans on chain in 18, did the first securitization of blockchain loans in 20, did the first AAA rated securitizations of blockchain loans in 23. And at this point, we've done, I think, somewhere between 42 and 43 billion transactions on public chain and lending.
Who's involved in that ecosystem now? How is that working? Because people kind of don't realize that there is parts of the financial system that is using blockchain and has been for a while. So talk through that, because I think it's interesting.
Bitcoin is once again making headlines, and this time traders are eyeing a potential surge to $108,000. After weeks of slow movement, BTC finally showed signs of life, pushing above $98,000 and marking its highest daily close in nearly 3 weeks. Many see this as a pivotal moment, a bull market pivot point that could lead to a breakout. The excitement isn't just based on price action alone. U.S. macroeconomic data is playing its role in Bitcoin's rise. jobless claims exceeded expectations, hinting at a weakening labor market, which could pressure the Federal Reserve to rethink its tight monetary policies. However, despite this, CME Group's FedWatch tool suggests that a March interest rate cut remains unlikely. Even so, Bitcoin is showing resilience, aligning itself with traditional assets like stocks and gold, both of which have been climbing to new highs. Traders are now watching key technical levels. Patrick Abe, a well-known analyst, pointed out that flipping $100,000 into support is the next crucial step. Another trader, Roman, highlighted $98,400 as a key pivot point, suggesting that if Bitcoin breaks past it, a $10,000 surge could be next. His reasoning? Volume trends suggest a potential breakout, which could send BTC soaring towards six-figure territory. Bitcoin is also stepping up to match the performance of traditional assets. Gold and the S&P 500 both hit record highs this week, and Bitcoin is now playing catch-up. Gold's market cap recently crossed $20 trillion, sparking debates about its performance versus Bitcoin. While gold has doubled investors' money in 5 years, Bitcoin has historically doubled every 16 months. The question now is, will Bitcoin finally follow the path of gold and stocks and break into new all-time highs? Momentum is building, and if traders' predictions hold, Bitcoin's next target of $108,000 could be closer than many expect.
If people want to exchange it for cash or whatever their needs are, the fungibility within the real world has always been another issue, right? Because of regulation and banking. And
Right. So it's a security off-ramp, on and off-ramp, just as if you were investing in a mutual fund directly from the fund issuer. So we have a set of financial entities that provide fiat rails during market hours. And then what we're working on with a couple of our partners are stablecoin rails non-hours. So, on a non-U.S. banking hour, you'd be able to turn yields into USDC to the extent that you wanted to do that. During U.S. banking hours, you can turn it into U.S. dollars and ultimately into euros and other currency as well.
so you've also built an exchange.
Yeah.
Talk about the exchange and why you did that. So I'm trying to get together, there's a vision here of something much larger, and you're building component parts, which I can see. So I'm trying to get to, okay, what are these parts and where the hell are you going?
Yeah. So let me talk about that, and then I'll go back to the exchange and how it fits in. What we're ultimately trying to do is build what we would call the exchange of everything, right? The ability to have equity, fixed income, crypto, all under one venue and all seamlessly cross-collateralized. So if you went to a big sovereign like a Temasek, for example, they would tell you that if they could more efficiently cross-collateralize their assets, they would have twice as much capital to deploy. And so the first step of this is let's get everything under one roof where we have true perfection to the assets. We're not tokenizing a DTC security, for example. The security lives on chain, so we know we have the perfection to it and the ability to liquidate it. Let's get a true blockchain native ecosystem of assets, securities, crypto, et cetera, and provide that ability to cross-collateralize. That opens the second problem, which is if you went to a Temasek or a GIC or a big sovereign like that, they'd say, well, if I could deploy a lot more capital, I can't get it because I'm named full on the prime broker or they're named full on me, right? Effectively, that ecosystem's been topped out. And that's where that whole democratized construct of it doesn't matter who the borrower is, it's people with money lending against assets that want money and disintermediating the construct of a borrower and single name credit risk, et cetera. That's when we really create a massively efficient capital ecosystem. And that's what we're trying to build out. And so if you rewind it, our efforts that we've done on lending and that ecosystem that we're building out, again, there's first order benefits of why we did that. We save a lot of money using the blockchain. It's allowed Figure to be a very profitable business, et cetera. But the real goal is that was just the first of a series of assets we're bringing on chain that allow for that cross collateralization. And we're doing the same thing now with crypto. We're doing the same thing with a couple of different efforts on public equity, including, why we're involved in this Ionic situation, which was the miner that came out of Celsius, and what our focus has been on running that shareholder activist campaign there, because we want to get that stock listed on chain and start showing this ability to seamlessly cross-collateralize across asset types. And so within the exchange itself, it really forced us to think about how exchanges work. And the thing that I always kind of scratch my head on, it's ironic that Binance and Coinbase are as large as they are, trading blockchain assets, but not in a blockchain, right? It's a true centralized exchange construct, right? You deliver your assets to them, they hold the assets.
Bitcoin has been struggling to hold above $98,000 since early February, and speculation is growing over whether market manipulation is to blame. Some analysts believe that spot Bitcoin ETF are being used as a tool to suppress prices, with large financial players allegedly pushing Bitcoin lower to trigger liquidations before accumulating more at a discount. While this theory is intriguing, the reality is far more complex. Analyst James CryptoGuru has claimed that traditional financial markets being closed on weekends gives manipulators an opportunity to apply downward pressure on Bitcoin. This would cause leverage traders to get liquidated, accelerating price drops. However, this strategy is risky, as Bitcoin's price movements are unpredictable, especially when markets reopen and new economic data emerges. While large order executions do impact short-term price action, they don't guarantee sustained market control. Another theory suggests that whale chat groups use advanced trading bots and massive funds to coordinate price swings across multiple assets. Some even speculate that Binance plays a role in these sudden drops. However, there is no concrete evidence proving such coordination. Even if large players are actively trading based on privileged information, cryptocurrency markets lack the same regulatory oversight as traditional securities, making it difficult to classify such actions as illegal. Despite these claims, Bitcoin remains a highly liquid asset with deep order books across major exchanges like Binance and Coinbase. While manipulation is possible in short bursts, long-term price action is still driven by broader market trends, investor sentiment, and macroeconomic forces. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.